So y'all about to be making a higher APY than I will, right? Now, will these APYs change over time? Yes, of course. They are all variable. They're all going to change based on the market. Just because they're high now doesn't mean they're going to be high even tomorrow or next week. And so take advantage of them now, because if the Fed cuts rates again, guess what's going to happen? These rates are also going to get cut as well. Yo, what's goody? What's goody? Latrell in a hoodie. Welcome to another episode of the Brother Next Door podcast, where we talk about finance, personal development, and skills to get you further in life, the actual steps, and my own personal experiences. Hey, you already know all the YouTube jargon. Go and like, subscribe, leave a comment. Let me know what you like. Let me know what your thoughts on this episode and also previous episodes, family. I enjoy putting these videos out. I know you guys enjoy watching. That's why y'all keep coming back. But if this is your first time, then I hope you stay for the long time. But today we're talking about high yield savings accounts. Why? Because the Fed just slashed rates. What does that mean? They cut it by 50 basis points. What does that mean? What does that mean? That means that the cost to borrow money has decreased, right? So the amount of money it takes to borrow, the interest rate, right, has decreased. And so that's good, but that's also bad. You know, there's positive sides to it, but there's also negative sides. What's the negative sides as it pertains to high yield savings accounts? Understand, when it comes to high yield savings accounts, now the bank is paying you rather than you paying the bank for loaning the money, because they're just going to take your money when it comes to savings, whether it's a high yield savings, whether it's a regular savings account. It doesn't really matter. Once you put that money in, it's just a bunch of zeros and ones. And so understand, once you give that money to the bank, they're taking that money, investing it in making significant amounts of money and giving you 0.01% of that amount when it comes to regular savings accounts. That's why I decide to put my money in high yield savings accounts. That way I get a greater return on my money. So going back to the topic of this video, with the Fed cutting the rate by 50 basis points, that now means that it's cheaper to borrow. That means they're going to pay you, right? That means the bank is going to pay you less for keeping your money with them. So understand, I got a couple screenshots for you guys. Actually, they are on my phone, and I'll go ahead and put them on while I have Thomas go ahead and put those on the screen for you guys. But understand, my APY changed 3 times since August, family. It changed 3 times since since September. It's changed 3 times. And so it went from 5.1 to 4.1%, from 4.1 to 3.6%. And so I went from 5.1% all the way down to 3.6% when it comes to my APY. And so understand, this isn't an investing account. This is literally money that we're putting aside, that we're just parking aside for emergencies, or that's what I'm doing at least. Eventually, once I get past the student loans, I'm going to make it my 3 to 6 month emergency fund. Right now, it's just my $1,000 to $2,000 emergency fund. And so that's all it is, family. This isn't better than the stock market or anything like that. This is just, hey, when I need money, I can go to this account, get it within 2 to 3 days, right? 2 to 3 business days. When it comes to a regular savings account, you can get that, immediate. You can get that money immediately. But once again, you're not getting those benefits of the interest rates. So let's get to it. Let me stop harping on whether you should get a high yield savings account or not. Another way you might see it is HYSA, right? HYSA, abbreviated as just high yield savings account. And so in this episode, we're going to go over the top 5 accounts in October, right, that I found, at least when it comes to the percentage of APY. And so let's get right into the very first one. These aren't in any particular order, but the first two will be a lot less barriers of entry when it comes to creating an account. So the first one is Everbank. As you can see, their APY is 5.05%. Higher than mine, right? Higher than my 3.6. And so you can take advantage of this account right here. Understand 5.05 APY. And what does APY mean? Annual percentage yield. And so when it comes to annual percentage yield, that is your return on investments at the end of the year with compounded interest. And so it includes the interest that you're making throughout the year compared to the regular interest rate, which is just your initial balance and the return on investment on just the initial balance. So it's not as accurate as the APY. So that's the difference between APY and interest rate. No monthly maintenance fee, no minimum balance required, interest compounded daily. Daily, fam. And then FDIC insured. All these are FDIC insured. I made sure. $0 to open. So there is no limit. There's no minimum. Would be better to say there's no limit. There's no minimum when it comes to opening this account. You can start with $1, $10, $100. So you have no excuse for not opening a high yield savings account. Latrell, I ain't got it. You got $1, fam. You got $2. If you don't got $1, go ahead and send me an email. I go and send you $1 so you can open up this account, family. Now let's get it. Don't sweat the unnecessary fees. No monthly maintenance fees, mobile check deposit, or no mobile check deposit fee, family. 5.05%. Next up is the Betterment account. Save and earn more with 4.5% APY. And so with this account, zero fees, $2 million insured, easy with FDIC insurance. Like I said before, what is FDIC insurance? So all that is saying if the bank, right, if the bank falls under, if the bank goes bankrupt, then up to, in this case, $2 million is insured. So you will get your $2 million or $4 million for joint accounts back. Usually it's $250,000 per account and per type of account when it comes to an institution. And so you're able to use multiple accounts from that institution to, have a higher security, right? So you can get up to $1 million or $2 million insured. But generally, it's one account per person, $250,000 is insured. Unlimited withdrawals, right? No minimum balance. And so that is number 2, Betterment. Number 3, this for the Texas folks. Texas Capital. So understand with the Texas Capital account, best interest rates, no monthly service charge, easy to open. So now, if you are in Texas, this is where the barriers come into play. If you are in Texas, you can enter in with 0.01 cents, not even $1, 0.01 cents. You can enter in on this account up to $1 million, right? The interest rate is 4.79%. That's the interest rate, right? So that's your initial balance. Say it's $100. They're saying by the end of the year, interest rate wise, you make 4.79% on that $100. Annual percentage yield is 4.9%, including compounded interest. That's for Texas residents. If you are not a Texas resident, you can still use this account. But your interest rate will now be 2.1% and your APY will now be 2.12%. So it's all good. You can still invest. And here is more information if you want to pause and look at all this other great information. FDIC approved, of course. Next, Lending Club. Take advantage of savings, 5.15%. Now, the thing with Lending Club is, yes, you get 5.15%, but you have to deposit $250 every single month. So you gotta have a little money in your pocket. You gotta have a little, a little extra money on the side to be able to use this account, because you gotta put an extra $250 in this account every single month to continue getting that 5.15%. Now, if you don't keep continuously do the 250, then you just lose the APY. You don't get any fees, nothing like that. You don't have to worry about that. But you'll lose that 5.15% APY. And see, miss a month, no problem. You miss a month, no problem. You'll still earn a standard rate of, look, you'll still get 4.3% APY if you miss a month. That's still better than 0.01% that your big chain banks give you. No fees, zero minimum balance. There you go, minutes to open, free, and then you get a free ATM card. So that's pretty clutch. That's pretty clutch. So you can actually access your money pretty quickly with Lending Club if you go this route. So you don't have to wait 2 to 3 business days. Open Bank, let's get it, 5.25%. This has been the highest so far. 5.25% for Open Bank High Yield Savings Account. Top tier rate. Watch your money grow. FDIC approved. No fees, but there is a caveat. Minimum deposit of $500 is required to open up this account. So you gotta have the $5. You gotta have $500 to open this account. Only takes 5 minutes. So family, most of these accounts don't require a lot of money. That's relative, whatever that means to you. Don't require a lot of money, from zero from 1 cent all the way up to 250 or up to 500 as of right now. And they all of them say, quick and fast system to open up the account. And so understand, family, like it's a low barrier to entry when it comes to getting a great return on your money. So don't sleep on these accounts. This is not financial advice. I'm not a financial advisor. I'm just letting let you guys know what I'm doing and spreading the knowledge to you so you can go do your own research and see if it's the best option for your current situation. High yield savings account. Who can apply? You got to be 18 years or older, right? You can't already have an open deposit account with Standard Bank, blah, blah, blah. Pause. Read all this. There are some states where you're not allowed to open up an account there, and then the rest of them you can. Like I said, pause or go to this website, openbank.us, and do your own research. Last but not least is Western Alliance. It is 4.96% APY. So understand, with this account, same as before, you have to deposit at least $500 in order to get in and start making a good return on money that's just sitting there anyway. That's just going to be sitting there anyway. You should already have a little nest egg for a rainy day. So that money is just going to be compounding for you. FDIC assured, low minimum, zero fees, secure online, right? So why does this happen? How does this happen? Why are the APYs so high for these accounts? This is because these are online banks. So understand, they don't have brick and mortar. They don't have to worry about a lot of overhead costs. They just got to worry about maintaining the site, have their cybersecurity team, all that good stuff. They don't have as much overhead as regular banks do. And so that's why they are able to provide a higher APY compared to large major banks. And so understand, with my high yield savings account, and specifically, which I use Credit Karma, if you didn't catch that in the previous little screenshot, they use a plethora of banks and combine all that together to form the APY. So they're not just going through one bank, right, and just being the middleman to one bank. It's actually multiple banks that they use to combine to have that average APY, which is now less than all of these. So y'all about to be making a higher APY than I will, right? Now, will these APYs change over time? Yes, of course. They are all variable. They're all going to change based on the market. Just because they're high now doesn't mean they're going to be high even tomorrow or next week. But at the time of recording this video in October, mid-October, they are what they are. And so take advantage of them now, because if the Fed cuts rates again, guess what's going to happen? These rates are also going to get cut as well. And so keep that in mind, but that's not the biggest thing. Once again, that is not the biggest thing. The biggest thing is that you have a savings account where you're putting money aside for a rainy day, for something to happen. That way you don't have to go get a personal loan. That way you don't have to go into credit card debt or whatever the case may be. You already have money put aside, so you just go into this savings account. You use this money, and then you just keep going like you never miss a beat. For me, that's every paycheck. Every paycheck, $100 goes into my high yield savings account. I don't even think about it because it's on auto pay. And so it's like clockwork every other Thursday. And so take that into consideration. Consider doing it yourself if it makes sense for your situation. If it doesn't make sense, for me, that's $100. For you, that could be $10. For you, that could be $1. But get into the habit of saving, and it will become easier and easier as you start to develop, as you start to grow into your career. I hope you guys are enjoying the episode. Let me know what you like down in the comments. Let me know if you are saving. Let me know what savings accounts you are using down in the comments, and what your APY is for your high yield savings account. And I will see y'all in the next episode. Peace.